Welcome back into our live streams. Today we're going to be breaking down a little bit of what happened within the Bitcoin market, but also in markets in general, why this flash crash occurred, and hopefully give you some insights going into the rest of the week. My name is Paul Barron. Welcome back into TechPath. Let's get started. I do want to thank our sponsor, and that is Coinbase. If you're brand new to crypto, maybe you're in crypto for quite some time and you're just looking for a new exchange, make sure and check out Coinbase. You can get actually a $200 value in crypto just by using our link. So the future of money is here, the most trusted place for people and businesses to buy and sell crypto. Check it out. It's one of the most, I like the app side of it. If you're a mobile, device user, I think it's probably one of the more useful apps out there in terms of acquiring crypto and a ton of tokens. So check it out. Just use our link down below. Let's get into a couple of tweets here. I want to start over here with Watcher Guru. 110 mil liquidated from the cryptocurrency market in about 60 minutes. This happened yesterday afternoon. It was falling fast. I think everybody was kind of looking at what the potential was there. Obviously, this started to move into a lot of liquidity around shorts and what we are seeing in the markets overall. Crypto R Us kind of hit on this. This is the most liquidations we've seen at one time, and Bitcoin has seen in over a year. So no big deal. I mean, it almost immediately started reversing back. So it was kind of interesting. I think anybody that's really been in crypto for very long understand that these kind of crashes happen all the time. Down and it's back up, and then you start to see, the trajectories typical of Bitcoin and other digital assets. I want to go to a clip real quick because there was a few analysts out there, Anthony Pompliano, kind of responding to what some of the analysts were asking. Take a look.
The sell-off was said to be sparked by a wave of leverage-driven liquidation after a drop in Ethereum. Joining us now to discuss the crypto market is Anthony Pompliano. We've seen a break under 59 a couple of times, only to go back above 64, 65. What do we make of it?
Well, I think it's just sideways summer, right? People kind of saw this huge run up after the Bitcoin ETF got approved earlier this year. A lot of capital flew into that, both retail and some institutional. And when the summer hit, people, I think, kind of just went away. And so as we've traded sideways, there has been volatility. But I do think that if you look at the historical kind of bull run cycles, kind of end of Q3 into Q4 is when things start to pick up. But also leverage has definitely increased in the use in the market. And so whenever you see kind of an illiquid asset, you get a good amount of leverage in there. It can move in both directions with more volatility. And if you compare Bitcoin to maybe something like gold, they're both sound money principles. But Bitcoin's 1 year volatility is 0.35, gold's is 0.09. And so that volatility is part of what draws people, that they want the upside of something like Bitcoin, but they still want the sound money principles.
So they still want to trade it.
So, I think those are reasonable analysis, and it is crypto in the crux of what we've seen before around some of these slower months. So I'm kind of in agreement with that, and I do see, you see this within all cycles that we've seen in the past. The interesting thing is, how do the ETFs respond? And I think that's the factor that we have yet to really see, because when you look at the ETFs, even though, yes, they've dipped slightly, but they've been mostly up, especially IBIT. So it's going to be interesting to see how this all plays out, especially as Bitcoin starts to run over 70K. That'll be the tell of how this all starts to show. I want to go over, of course, and get into the ETH ETF. But before I do that, make sure and jump into the Diamond Circle. This is one of the places that you guys can get additional content. All you have to do is visit our website, Paul Barron Network, and jump onto memberships. That's where you sign up for the Diamond Circle. We do a lot of additional content over there. It comes out to you in your email, and it's a great place to get into our own community. You guys can talk to me directly. I'm in that chat all the time. So check it out. Just use our link down below. It does help kind of build the connection of a lot of our users and followers out there. So let's get into ETH. I want to talk about this real quick. The spot ETF flows now a little bit underwhelming overall versus Bitcoin. This coming in from JP Morgan. A couple of points they hit on right here. Net outflows overall since their launch. This was, of course, a little bit dismal. The outflows from Grayscale's Ethereum Trust were also much larger than the bank had originally anticipated. And then the bank also noted growing interest from asset managers for a combined ETF that gives exposure to both Bitcoin and ETH. That doesn't necessarily put people in the ETH boat all in, and we've talked about this before, is that the likelihood is that we would probably see a mixture of those ETFs starting to flow. So, and that may be happening now. I've got some other clips here. One, of course, is John Wu, because this is getting into more detail around Avalanche and also just the ETH ETF in general. He's got a good take on this. Take a look.
Why do you think we haven't seen the same enthusiasm for spot Ether ETFs that we've seen for spot Bitcoin ETFs?
It's nice to see you, Tim. I don't think anyone anticipated Ethereum ETF to be as successful as the Bitcoin ETF was. But in reality, Bitcoin really has just one competitor, that's gold. Ethereum is about creating utility and use cases. They actually have many, many competitors, from Avalanche to Solana to a whole bunch of others. And so you had a situation where the supply, because it's a mint and earn proof of stake type model, where supply is increasing, and yet transactions are just kind of steady. So there's a little bit of imbalance. But I am very positive that over time, it is still in pole position and has a chance to really create a lot of this access will allow others to get into the space.
So you're still looking forward on, ETFs, especially into, these secondary chains, much like what we've seen with ETH. But remember, Avalanche is also potentially in the running for an ETF. He had some things to say about that. Take a look.
And more hopes of a Solana ETF being approved really diminishing here in many ways. There's not a lot of hope for one to be approved in the near term here. So what does that mean? Would you want to be associated with some sort of ETF wrapper at some point? Is it problematic that more tokens are not?
So I can't speak for who's going to get ETF or not. But as an operator space, what I care about is that you see more adoption. And this space really has three components that drive it. One is the macro level. We saw Jerome Powell come out, so that's going to be positive. Not just US. Every central bank is lowering rates. Flows, the fact that there is an ETF for Ethereum and Bitcoin will create more access, so that's ultimately positive. Morgan Stanley is going to let their RIAs now sell Bitcoin ETFs, so that's definitely positive. And I think what people don't realize is the adoption on network and in this space is actually growing a lot. If you look at wallets, look at addresses, it's there. So I'm very positive going forward.
Now, you guys probably remember a video we did quite some time ago around Hashkey, and this is one of the Asian market offerings out there. And the key was which token was going to get approved beyond Bitcoin ETF and Bitcoin and ETH. And one of them, of course, was Avalanche. So it did actually happen. I'm surprised that we're not seeing more news on that just yet on AVAX. I think maybe that will have some impact coming up soon. And most likely we are going to be doing a big Avalanche video coming up probably early next week. So be on the lookout for that. There are some things happening that we'll reveal around Avalanche and some of the strategy and research that we've been doing. So I want to get into the next big news item. And of course, that is the Wells notice over to OpenSea. US SEC wants to now sue OpenSea because NFTs are securities. The idea behind this is pretty much what Gary Gensler has been doing for quite some time, and that is a war on crypto and all crypto. The difference here with OpenSea as a Wells notice opens up everything. It opens up creators, big brands, all sorts of entities out there that are way beyond just going after a single project. This is by far one of the biggest, I think, overreaches that we have yet to see. Possibly a lot of people don't truly understand the implications that this could have as a ripple effect throughout not only business, but I think the future of Web3. So this is a much bigger story, and it's a much bigger issue that I think is going to be addressed in the next few months. One thing to kind of, and because it's such a great big story, look at what OpenSea responded. To help ensure creators are continuing to build without fear, we're pledging a $5 million bounty, so to speak, to cover legal fees for any NFT artists and developers that receive a Wells notice. So that is, I would have to say, that's pretty ballsy. So kudos to them. I think this is the key because it is a fight right now to deal with this. And again, it is the crypto army led by Senator Warren who has pushed Gary Gensler into the limelight and, of course, as her person to really kind of help construct the fight against what we've seen all across crypto for quite some time, and now no different here with OpenSea. Other tweet right here. This, of course, is a day after, interesting timing, day after Trump dropped another NFT collection, OpenSea received the Wells notice from the SEC. So Trump killing the NFT market. I love it. I think it's called innovation is killing the NFT market. Here's Cameron Winklevoss. He hits on it. The reset with crypto has turned into an expansion of the war on crypto. Totally agreed with that, is that this is just getting more brisk and more brisk, which tells me something in the way of what we're going to most likely see coming out of the Harris camp, and that is probably a anti-crypto stance, much like the policy that was carried over from the Biden administration. Tyler Winklevoss came in and says the SEC is now trying to claim that NFT securities are securities. What's next? Baseball cards, comic books, you name the collectible out there, you're going to be exposed to it. Digital Web3 creators and artists are now in the crosshairs. So this is a big deal, and it does change I think, maybe even the strategy for innovation here in the United States. And I want you to think about just a handful of companies that have been able to do this, even though there's a slew of major brands. But Nike is probably one of the ones that I kind of consider the most potential, because they've had such a successful phygital and digital campaign in terms of really extending brand IP. And I think that's the bigger question here, because that is going to thwart Nike from other global shoemakers as well as other global fitness companies that are going to be able to implement strategies around this, where Nike may end up doing something a little different, especially if this gets a little bit more heated and we don't get the pushback. But I imagine we're going to see a massive pushback to the SEC on all of this. And of course, you have Anthony Scaramucci coming in. Gensler wants Harris to lose the election. Pretty clear, I think. As I said, I think these kinds of issues are continuing to track along in a very big way. I do not necessarily believe much in the way of where Polymarket's trends are going. I think there is a clear leadership right now when it comes to the crypto community that most likely it's Trump's election to lose. There's just too many things that are happening that are not good for crypto, and crypto, I think, will make the difference, truly make the difference going out there. Make sure and drop some questions in over on the side. I'll try to get to some of those in the chat. And if you're, by the way, if you're not, like I said, if you're not in the Diamond Circle, get in. Always, we leave a link down below. And also, I think we've got a poll going, right? So make sure and fill out the poll. We'll kind of take a look at that as well. I want to click over to this tweet right here. And of course, this is interesting because that's Max Kaiser. Now, Max Kaiser, you guys will know Max. He is pretty much one of the Bitcoin maxis out there, but his statement, pretty straightforward. NFTs are unquestionably securities. Gary is correct. So let me know, do you guys think Max is full of it or Gary's full of it? Give me a comment down below and we'll get going. Nice questions coming in over there. I will get to those and take a few, so make sure and drop them in. Here's another point I want to make, and this is some of the stats. I was surprised at some of these numbers, but these are some of the stats around NFTs, and this is now, this year. I'll zoom in on some of these. NFT market worldwide projected to reach a market volume of about 3.2 billion in 27. NFT market is expected to have about 19 million users by 27. And you look at the size, look at that, Gen Y, this is still going to be a large portion of the market, I think, going forward. And that's going to be a big voting block, too. 10,000 wallets, NFT market will reach 80 billion. I mean, look at these crazy stats. The amount of impact that this has on the overall market is significant. So I think Gary may have actually picked a fight that is a little bit too deep. Here's number 12. Millennials are 3 times more likely than Gen Z to purchase NFTs. So again, that's right now the biggest earning population in the United States. Around 42% of millennials also have a tangible collection. So that's the other factor that comes into this. So this is going to affect a lot of people, I think, in a very quick way. I want to go to a clip real quick. And this is James Safer talking about Donald Trump's pro-Bitcoin position. Take a look.
The political process 100% was involved. How much was involved is up for debate, in my opinion. I think what the SEC was trying to do, they had sent Wells notices basically saying they were going to sue Consensus, which is building a ton of shit on Ethereum. What they were planning to deny the ETFs. They wanted to find some smoking gun, some smoking bullet to basically say, like, this thing is a security. We can't approve these as commodity-based ETFs, which is what they are now. I think they were having a hard time finding information. They knew if they denied, they were going to have to go to court. And I think initially the SEC was okay with that. We'll go to court, we'll lose again, but we're going to kick this can down the road as far as possible. But then what you were hinting at, Trump had his NFT party in Mar-a-Lago in May 9th or 10th or somewhere around there, and talked about how he loved Bitcoin. He's going to be the Bitcoin president. But the problem is, did the Biden admin call down and tell Gensler, like, look, we're not going to lose an election because you denied some Ethereum ETF. Like, who actually cares? Like, we're going to say we're pro crypto. They haven't done anything besides approve the ETF really to say that. But I don't think they wanted to lose on that argument.
Well, I think James is wrong there. They're going to lose on that argument. I think the crypto community is powerful enough, and I think it's getting just more pissed off when it comes to these kinds of movements. And remember, all of this is this next 60, 70 days is critical. Here we are going into September. Literally, we are inside that window now where I think these kinds of mistakes are very deadly for campaigns. So it's just a situation, I think, where, if you're in that camp right now and you're not trying to correct what's happening in DC, then we clearly have, I think, a vision of what it's going to look like for the next 4 years if we don't get someone else in the White House. A lot of questions coming in. Last clip I want to hit on was this right here, and that is talking about NVIDIA real quick. 1 million invested in November of 2022, now worth 10 mil. Now, that's the power of AI, guys. And we've talked about a lot of AI tokens out there. This will translate into a lot of projects that are living within the crypto ecosystem. You guys know them. You're going to see everything from Render to Near Protocol, etc., that I think are going to benefit from the continued resurgence of the potential that we'll see from NVIDIA. And of course, their earnings are coming in right after close today. So my anticipation, this will continue to rock. We'll probably see another big move in the S&P tomorrow, and possibly some big moves in some of the crypto AI projects out there. All right, let's get to a few questions on today. But before we do that, let's go over to the poll real quick. Take a look. All right, what happens first, Bitcoin 50 or Bitcoin 70? Everybody's split on this. Wow. 53 on 70, though, so a little bit more bullish, but surprising. I'm going to stay with the bulls today in the 70K camp. I don't think we're going to 50 quite yet. PBN, Ether, Sol, which is a better investment? Well, they're both good investments. I'm not an investment advisor, but for me, they're both good investments. I like them both. I'm invested in both. It's pretty obvious NFT collections are utility tickets. Easy case to argue in court for sure, Bobby. That's no doubt. How will the 0.25 rate cut next really affect Bitcoin? I don't know if some of it's priced in. I think the bigger concern I have is going to be the issue around jobs. Because remember, this is something that Powell has said, the jobs number is what they're focusing on now. They've got to slow down this unemployment. If they do not slow down the unemployment and we continue to hold inflation, even if we only drop a point, just 100 basis points, you're going to see a big impact on how the market receives that quarter point, meaning we may not see a big run up. Now, granted, sure, there's going to be up to 4 cuts over the next, 18 months, I think. That will start to get into some good position because I think it will help correct some of the markets, including real estate, et cetera, that will start to, help ease up some of that, but it still boils down to jobs and how sticky inflation holds. 50K in September before a rate cut? I don't think so. It could go there, but right now it's a little bit on the sideways. Time to buy more NFTs. Might be a good move right now because there could be a lot of NFTs bottoming out right now with all this news. I've always thought Max is full of it. Render or Near, better ROI this bull run. Ooh, that's a tough one. Render's had a really good run. Near is kind of on back and forth, and it also has had a good run. I think I would hedge on both, really, but those are the two I like for sure. Funny, XRP is in the spotlight. You laugh now. It's now it's in your court and everybody's crying. I don't think so. I think XRP, remember, the only non-security by the courts. So the XRP, family and the XRP army have a lot to be thankful for on that. SEC versus RH court coming in October. Regardless of your position, the outcome is important on that. On the Robinhood case. Okay, all right. Yeah, that is true. But I would look at Coinbase. I think that's a big one that we'll continue to see. And we still need legislation to get through in the fall. I think it's November and December where we still have some opportunities. I don't know if we'll get anything done this year, but we'll see. Chainlink or Pith? Chainlink. This will be thrown out of court. Bobby says, I'm kind of in that camp, but it's going to cause a lot of damage on the way. Collectibles, now securities, unlikely. SEC sends a notice the market's supposed to trend upwards. They do it purposely. NFTs, I love it. PBN, just curious, did Cardano accidentally eat the last slice of pizza? Can't figure out why. Okay, well, okay, you don't love every token, and it's not that it's a love. That's the first thing. Do not fall in love with tokens. They're just assets, okay? They're volatile. They move around. Some go up, some go down. If you like a project, you probably have a reason. Sometimes you just like it because it's a cool meme coin. Sometimes you like it because of the founder. You know, we just have not, you know, at one time I owned a lot of Cardano and had a great return on it. So it was an awesome token. But I'm just looking for bigger opportunities. I don't necessarily see that right now in ADA. Let's see what else we have. Another man's point. Yeah, okay. Looking to buy up some more dips. True on that. I think this is a good position where if anybody's looking at dry powder, look for some of these dips to continue to move along here, because you're probably in a position where you're holding through next year. What's happening now is really just a little bit of noise. Let's see here. Thanks to Binance. No, I don't think so. 50 to 70. A lot of statements out there. I know we got a lot of comments in the show today, but one thing for sure, guys, you got to get out there and vote this time. If you've never voted before, this is the time. If most likely you're watching our show, you're a 1 or 2 issue voter, and crypto is going to be here for a long time. This is going to have a huge impact on your future, and if we don't get administration supporting this industry, it is going to be an issue. And I think this is the thing that everybody needs to really understand. Let's see here. What else? One more poll? Okay, let's go to that second poll. All right, Gary Gensler fired or resigns before. Ooh, that's closer than I thought. I don't think he does it before November 5th. Now, granted, he's definitely getting in the mix here, causing Harris a little bit of trouble. Could be a subtle, tug, but I don't think so. I think he stays in the office for at least until the vote. What else do we have? I think there was one more on HBAR. Let me see if I can pull it up there. What was the deal on HBAR? Can you please, from anyone from HBAR, did you like the, like you did, we just had a video with HBAR. Go back and just search Hedera on our channel. We just had Mance Harmon on not too long ago, maybe 2 or 3 weeks ago. Plus, we have an HBAR video dropping tomorrow that has an amazing angle on how Hedera is being used in the banking system. You guys don't want to miss that video because it's a really good video on how banking in credit unions are using Hedera. Filecoin or Arweave? Ooh, I'm going to say Arweave just because, it's the new kid. I'll go with the Arweave on that one. All right, guys, we're going to be trying to get more videos out to you this week. We've got a lot happening here. We will, of course, you're going to have Labor Day this week or coming next week. So make sure and stick around. If you're not subscribed to the channel, do that right now. Hit that little bell so when these lives go out, you'll get notified. And make sure, follow me on X. It's just @PaulBaron. We'll catch you next time right here on TechPath.